Hey, what's up, team? Welcome back to the channel. Today is one of those really busy days. I actually have a meeting. I'm actually starting up a new company, and you know what? I'm gonna call it Project X, so be looking out. But I'm actually about to get ready to head to that meeting. But I wanted to talk to you guys about trend lines. So let's say you took a buy on your favorite currency pair, all right, in an uptrending market, and you're wondering where should you move your stop loss, or how should you trail the stop loss? Well, the trend line is definitely going to help you with that. See, the thing about the trend line is, what I love about it is that it's going to help you find the proper placement of the trailing stop loss. You know, it helps you gauges. A lot of people want to hold more profits. A lot of people want to trail it as it continues to go up, because this is about to be a trending market. So the trend line is going to help you place the trailing stop loss, know how to follow it as it continues to trend. Basically on a downtrend, right? And whatever comes down, whatever goes down must come up, right? You know that. So you know that it's going to be a trend reversal coming up soon. So I'm going to show you how to utilize the trend line to spot a full reversal. You understand? So stick with me. I'm going to lace you up and get you right and get you mastering the trend line, because this is about to be a trending market and it's a lot of money to be made. So let's get it. All right, guys, I just made it to the meeting, but before I do the meeting, I'm gonna lace you up and teach you everything you need to know about the trend line. Welcome to the J Wayne Q&A show. Let's get it.
You got questions? J Wayne got answers. It's the J Wayne Q&A show.
Hey, J Wayne, trade to get paid. J Wayne, he got the answers. Q&A. J Wayne, J Wayne, J Wayne Q&A.
What's up, y'all? This your boy J Wayne, you know, representing Team Take Profits, and I'm your Forex plug, and my mission is to help you become a profitable trader so you can get your time freedom back and start empowering people that's around you. If you want to finally understand how the market moves, how to get good entries, where to put your stop loss, where to take profit at in the market, then consider subscribing to my YouTube channel, because we talk about all that and more. But in this video right here, I'm gonna show you how to master the trend line, how to plot it on the chart the right way, how to spot the trend reversal using the trend line, how to trade the breakout of the trend line, how to use it as a trailing stop loss as well. So you're about to learn all of that in this video right here. Let's make this money, baby. All right, guys, so we're gonna start here on the 1 hour chart. I feel like I will be able to explain everything thoroughly on this time frame, and I believe that most people can relate to the 1 hour time frame. All right, so we have this big uptrend, and the only time you can put out a trend line is when you have a trending market, when the market is making higher highs and higher lows. So we can see that here. It's making higher highs, it pulls back, make a higher low, makes a higher high, higher low, and so forth, right? So now we can pull out a trend line, and here we go. So here's the misconception right here. People don't know where to put the trend line, right? Well, can I put it here, right? So this is correct, but this is considered an outer trend line, all right? But what about this trend right here? Are we not going to put the trend line up here? And the way I teach my team, we absolutely do put the trend line up there. As the market make a higher high and pulls back, make a higher low, and makes another higher high, we're going to mark up this inner trend line. We're going to mark up this inner trend line just like this. Okay? So the theory is, if the market breaks through the inner trend line, then it's most likely going to test the outer trend line. Test it. Go back and back test it in the market. You will see it happen over and over and over. I'm putting it on the bodies. Pretty much I'm putting it on the bodies. The bodies of the candles, not so much of the wicks. Okay? Now here's the thing. You see where the market shot up right here? Okay? I want you to put the trend line at the origin of those big moves. The origin means the beginning. The beginning. Where did this big uptrend come from? It came from, let me mark it up for you. It came from this area right here, right? That's the origin of that bullish push up in the market, okay? So I'm gonna mark that up. And then price came and made a touch on the trend line and made a higher high. And then it touched the trend line and bounced off again as well. All right. So I just want you to understand, if you ever get to a point where you get confused on, do I put my trend line at this spot or that spot? Always think origin. Where did this move come from? Where did it start? All right. And in this case, it started here and it pushed up. So I'm going to put my trend line there, right? Because I could have put it like, why didn't I put it down here? All right. But the market is dynamic. The market is not static. It does not stay the same. The market changes from day to day. So we have to move with the market. We have to identify the structure of the market as it continues to change. So that's why I said focus on the origin of this next big push up. Now this becomes steep. It is really shooting up right at an angle. That's showing you the momentum of the market. Is showing you the momentum at that time. The trend, the uptrend, the bullish market is powerful right now. But it's going to come to an end, but we have to be patient. All right. So that's why we use the trend line to time the reversal. All right. So you can see right here where, all right, it keeps shooting up higher and higher and higher. Right. And it comes back down and boom, the trend line gets broken. And what happens? A big drop off in the market. My goal is to find the friction points in the market. All right. That is what I want you to go back and do your homework on. Find the friction points in the market, because if you can find those areas in the market, there's going to be massive momentum when it breaks that friction point. Whether you use supply and demand zones, whether you use support and resistance or trend lines, when those zones get broken, it's a lot of momentum that goes with that. All right. So it pays to be patient and wait for those friction points to get broken. OK, so now I'm going to show you. Let's say we got into the buy. All right. We took a long here. Now you want to secure. Well, you want to lock in more profits. OK, so now we can use the trend line to help us gauge our trailing stops. So for an example, we took a buy here and market pushes up. It's never going to shoot up forever and ever and ever. All right. There's going to be correction waves in the market. Corrections and pullbacks are healthy. Right. So as it pulls back, no problem. Just understand that the structure, look at the structure. Boom. We're going to put our trailing stop loss right here. This is the first area. All right. As price comes back in touch, you need to get a touch or very, very close touch of the trend line. All right. Once you get that push and price makes a higher high. So let me mark that up for you. Price finally came back down to the trend line. No need to get worried. We got a lot of our profits locked in anyway. Right. So now price makes a higher high. As soon as that happens, we move up the stop loss and we continue trailing. But we use the trend line to gauge it bouncing off of it, and now that gives us a little bit more confidence to move up the stop loss. Now what I like to combine for confirmation is, look how it came above the 50 moving average, the 50 simple moving average. It closed above the 50 simple moving average. Now that's just an indicator, but when you can combine it with other technical analysis, and it can be very, very profitable, very, very powerful. And that just gives me the confidence to know that, hey, when price is above the 50 moving average, we're looking at a buyer's market. When price is below it, we're looking at a seller's market. Okay. So if this is an uptrend and price pulls back and then shoots up and close above the 50 simple moving average, that should give you some confidence. Right? That should get you a little bit excited, because now remember the rule, when price is above the 50 moving average, we're in a buyer's market, but it was already a bullish trend anyway. You see the confluence? So there we go. So we move up the stop loss, and as it continues to happen, it pulls back again. It pulls back again right over here, and it's right at the trend line, but it did not close below the trend line. But instead, it closes above the 50 moving average, making a higher high. Now we move up our stop loss. We're trailing it, and we're locking in profits, right? So if you now understand the value of the trend line and probably the 50 moving average as well, then I would like to see you guys give this video a thumbs up, because this is free information I'm giving you, and I just want to see you win. My goal is to help you become a profitable trader by any means necessary. So give this video a thumbs up, share the video if you will with your team members. I appreciate it. You can see it shoots all the way up. Not all the time it's going to be beautiful and easy like that. Sometimes it will come back and stop you out. It's just part of the game. All right, but it's just, you got to have, I would encourage you to focus on the process over the profits. Just focus on the process. Focus on identifying the structure looking left and seeing price making a higher high, and understanding your trend line is there to help you gauge whether you're going to continue to, go with the market in a long, or whether you should close it out and take profit and get ready for the shorts, right? So now that walks us right into the breakout. All right. Now here, let me just tell you my theory. Now, the way that I trade it, whenever I take a breakout at a friction point, I don't try to hold that. I don't try to hit the jackpot with that, right? If you will. I take the breakout if I choose to. If I take the breakout, and I'm going to secure pips, and I'm going to close the trade out, because a lot of times after a breakout, there's going to be a retest. All right? A lot of times. Now, 100%? No, nothing is 100% in this market, but a very high percentage, around 80% of the time, there's going to be a retest. So why take the breakout, hold it, knowing that you're going to get back to break even? You know what I'm saying? So you might as well just lock in those profits, close the trade out, and then wait for the retest for a possible re-entry. All right, so the theory is now we're taking the breakout of the trend line right here. I'll mark it up for you. Right here it closed. All right, we're only looking at closed data. We don't want to take it on open data. We closed data. Here it is. So this will be our entry. There's our entry. Okay, now with a little bit of drawdown of 29 pips, we locked in 100. Not bad at all. Not bad at all. What is that? A 1-to-3 risk to reward ratio? So I like that. And I'm taking profit. Now, remember the rule that I said. A lot of times it comes back and retests. Well, if it doesn't, oh well. Don't have FOMO or fear of missing out. Let the trade go. You know what I mean? We already locked in 100 pips. We can't get greedy with this. All right. But understand the process. All right. So now we got to pull back. You got to pull back at the trend line. That's an opportunity to enter again. All right. And then you already can see here what remember in the beginning of the video, I said when the inner trend line gets broken, it's a very high percentage that it wants to come back and test the outer trend line. That's why we need to stay on the higher time frames. We cannot sit on 30, 15-minute time frames. We always have to go back to the higher time frame so we can see the bigger story, the bigger picture here. And if you did not go back to the daily or the 4-hour, you would have missed that there was an outer trend line here that was about to get tested. All right, so you could have potentially held it, just like how we held the long. You could hold the short as it broke the trend line. Beautiful, easy. You know, it's easier said than done, but you gotta back test it. You gotta put the work in. You gotta put the work in. And so the homework that I want to leave you guys with, I want you to find this scenario over and over again for the month of January on the 1 hour time frame. And I want you to mark this up and see how it plays out. All right, because I want you to gain confidence and see that this happens over and over and over. You just have to wait for the right setup and then execute. All right, so obviously we can use the trend line as an area to take profit. All right, so you can say, okay, well, the price is coming down to the outer trend line. You know, that's an area, you know, whether it's 20 pips before, 30 pips before, that's an area that I would like to take profit at and then gauge and see what the market does after it gets to that area. So, you know, we use it at the trend line for many different things. Like I said, for 2020, the trend line is going to be your best friend because the market is about to pick up, no more consolidation and ranging, and it's about to start trending. All right? And so the trend line is going to be your best friend. We use the trend line to spot reversals. All right, reversals in the market. Use the trend line and you see it broke through. Well, now you mark up the zone. As soon as the trend line get broken, I want you to find supply and demand. I want you to find your support and resistance levels looking left. So let's do that together right now. I want you to find your area. So now, yeah, I pretty much like that area right there. So, and then you got another level right here, right up in here, right? Looking at this left shoulder here. All right, so I got a little area marked up. Now, as it breaks the trend line, it's gonna come back and test. If it comes back and test and make a lower high, now you got this big downtrend. In the comment section below, comment, let me know if this video helped you understand a little bit more on how to use the trend line. Boom, we spotted it, trend reversal. Let's trade it. Let's trade it so we can trade this breakout of this outer trend line. All right, going through the same confirmations. All right, so now how do you participate into this sell? Right, well, you use the trend line again and now you see a bullish flag or a bearish flag pattern. This is an hour chart. If you find these patterns on the higher time frames, you're going to get a lot of pips out of them. I just wanted to show you how simple this can be. Once you understand the principles of the trend line, it happens over and over again. This is another part of the market where you have an outer trend line, but then you have the inner trend line as well. So it happens over and over and over. All right, so just go ahead and back test. Back testing means go back 2019, start from January and just test it. Just get your hands dirty and get used to seeing how this works. My thing is, as long as the market goes sideways, as long as the market consolidates or go at an angle, there's a lot of money to be made because we're just going to keep utilizing the trend lines. And all it is just finding those friction points in the market and capitalizing to those continuation moves. All right, guys, so I hope this video was informative. I hope you understand the value and understood, you know, the theory that I was showing you. Also, if you want to know how to plan your trades, because we all know planning your trades ahead of time is very, very important, then watch this video over here to the right. And that video is going to help you up, lace you up, let you know what you need to know and how to plan your trades. All right, don't forget to like this video, comment, and subscribe. And let's make this money back. Peace.